Welcome back to our show, your show, Let's Talk Stocks. And joining us in studio this morning is Mr. Ryan Strachan. He's a Vice President at the GK Capital. Of course, he brings a wealth of knowledge to talk to us about the capital markets this morning. Welcome, Ryan.
Thank you, Neilson. Great to be here.
All right. So we're almost at the end of the second quarter.
Yes.
How have you seen the market so far?
I think the markets have been holding their own, coming into their own. I think we're on the cusp of, I want to say, a breakout. And I say that because we saw an IPO last quarter, an APO, albeit, maybe not what the issuer intended fully. But nevertheless, it speaks to activity. We'd have seen a pretty large announcement or substantial announcement or mention of future activity from the LASCO chairman.
Yes.
That kind of sparked a lot of interest in some securities. So I think overall now it's almost like we're at this tipping point. And I think it's fitting as we go into summer and then go into Q4 to where a lot of activity tends to happen as well. So I think the markets are interestingly poised. I'll put it like that.
I'm glad that you went there because when I looked at the numbers, so Q1 we were actually up. At the end of Q1, we've fallen off a little bit. And although we've fallen off, we're not seeing the big number of trades for cheaper value. And it seems that while all of that is happening, rates have still been where they were last year.
I'd say they've plateaued. And I think now everybody's expecting, well, when's the BOJ now going to reduce them by 50 basis points? Somewhat mirroring the US, where the talk now is, okay, one rate cut this year and then one in 2025 Q1, right? So everybody's now at that point of expectancy, waiting for the shoe to drop to then go and make the next step. I think local markets perhaps slipped because of, in the aftermath, NCB APO would have seen the price come off. And despite its recent challenges, NCB is still a material percentage of overall market, the index value. So like in years past where NCB went, the market went. So if you saw the years we won the leading stock exchange globally, I think 2018, for instance, NCB was, and I think even 2015 as well, there would have been some growth in it. So, I mean, all in all, very encouraged by what I'm seeing. I think it gives investors an opportunity to buy. Not that they should have ever stopped buying, but I think investors should be looking on intently.
There's better value.
I think so. And you really want to be buying in times like now, because if it's when everything's going up and nobody's selling, then you have to pay more, you have to pay that scarcity premium, and then you end up overpaying, or you're paying less than you could, or more than you could, which is essentially overpaying. So I think there's reason for optimism, and I think we'll be very happy come the end of the year with where the market.
It's interesting you spoke to NCB, and let's look at that stock a little bit. So you spoke to 2015, and NCB would have gone up significantly in 2015. 2018, I think the stock traded closer to 200, over 200.
Yeah, I think that's 2019, but it definitely started in that around that time to climb.
And so we've seen it come off. We've seen a number of changes in the company. Michael Leachin doing a number of adjustments, and he's now come to the market. To raise funds. And Michael is always somebody who's looking for that opportunity. What should we expect from this stock?
I think ultimately for me, it's going to come down to the outcome of this debt raise and what those funds are put towards. I think commercial banking is a viable business. I do think, though, there's some measure of overlap now where there's more competition in the space, just like lending.
Yeah.
You know, when you think about lending, you have commercial bank lenders, but then you have microfinance. You have investment houses that are independent, also providing. You have private credit now. So space is becoming a bit more congested. So then that would explain the deviation towards insurance, which is also a good business, but there's risk within it as well. So I think I think the end of the summer will be interesting because then we'd have seen whether there was really an active hurricane season. And active in a sense of, because I feel like the word active can be misleading. If you have 40 hurricanes that never come to land, it is active.
Still active.
Right? But it's not damaging to mankind, on inhabitants in a space. So I'm interested in seeing if we do have any kind of landfall or anything that's really damaging to economies around the region that would impact, the Guardian, for instance. So I'm in wait and see mode with NCME. I don't think the take up was encouraging. I'll be frank. I think it would be cause for concern. The business is tracking 25 billion, so I think anybody looking to buy it should really be looking at, what working backwards to see what that looks like from an earnings per share standpoint or price multiple standpoint. But there's a lot of headwinds. And I think we will really now see the skill of the captains based on how they're able to navigate through the current environment.
Their biggest rival, Scotiabank, has also been in the news recently. They've actually looked at increasing some of their rates. In a very tough competitive environment.
Yeah.
But their profits have gone, in the right direction.
Yeah.
Is Scotia the alternative? Are they making the right plays?
Absolutely. I think from COVID started, Scotia's MO has been a conservative posture in the deployment of funds. I think, if I recall correctly, there was a stated intention of assessing carefully their positioning with the loans, conserving cash. And I remember there was one particular transaction, I think it was 60 million for the Sanchez Airport renovation. I don't know if there's any other facility of note then, but they were stockpiling cash. And I think a lot of persons were wondering, well, why are they stockpiling cash? Well, then we'd have seen after when they were starting to aggressively go after their competitors' mortgages and essentially offer grade A or premium customers extraordinary, percentages or rates to then attract them. So they're getting high quality mortgages or just facilities in at, fair rates.
Yeah.
And having a lot more cash to deploy than the other competitors who may have been cash strapped. So then they could almost cherry pick the best on offer and grow the business that way. That has now manifested itself in profits. And then with us in more profits. And then we'd have seen, as you had said, where they were gonna increase rates, but it's almost belatedly having seen the dust settle in the market. Now they said, okay, we can inch this up. So yes, there's margins in it, but it also reflects increased cost of funds. But I think their cash provided a cushion that could cause them to do it later,
rather than
earlier, and then thus therefore even deepen client customer loyalty further, which were some pretty impressive steps.
The financial sector, the capital markets generally, is always key. And as you spoke to mortgages, I couldn't help but think of the investment companies and the role they've played in the real estate space, even while the stock market was relatively flat and falling in some cases. The Barritas, the Mayberries have looked at other areas. They've deepened some of what they're doing. We've seen Barrita and others, Proven, etc., active in that real estate space. We've seen Mayberry looking actively at the bond market space.
Yes.
What are the plays for some of these companies? Are they companies we should be following?
I think so. I think there's a lot of value in paying attention. You know, Mayberry with their, has stated that they will be borrowing for internal usage, but also to take advantage of opportunities in the market, right?
Yes.
And
They've been known for that.
and they've done it. They've done it at a very high level for a long time.
Yes.
I do think that is probably the one I keep my eye closest on, because I do believe that the local markets are going to be the asset class that drives the most value over the next 5 years. I think real estate does bear a lot of potential as well.
Yeah.
In some cases, infrastructure will have to lead in that respect, infrastructure upgrades. So, like, yes, we're seeing downtown Kingston revived, but the real renaissance will come when the drainage, the billion US drainage projects done.
Key. That is key.
Because until then, we will never have high rises downtown. So, in other words, I'm saying for the immediate term, I do think a Mayberry armed with cash going into a local market, if they can get supplier stock, is who I'd watch closest, because we're still seeing multiples relatively low. And it's only a matter of time, I think, before we have another catalyst, like an attempted acquisition by a large overseas player. And, you know, Jamaicans, a lot of us tend to follow, I'm not saying we're foreign-minded, but we tend to follow, our larger contemporaries in that case. And I always bring it up. Red Stripe and the market. Red Stripe market may have been about 7 times 2015. Red Stripe is bought at a premium at about 27 times earnings. Then the market increases 50% in 6 weeks. Right? Just on the back of that. And then that set off the run to 2019. So I do foresee more of that. I do foresee interest coming from South America. More so than just North America or Europe. Because, well, with there has been an announcement of direct flights from Montego Bay to Lima, Peru. This week. So again, and there was an attempted buyout by a Colombian business of CIBC, which fell apart. So it's not far-fetched. It's
not far-fetched at all.
It's not far-fetched. And once the language barrier continues to be broken down, more Jamaicans in business speaking Spanish and vice versa, because business people in South America all speak English anyway. It's just going to be
so the Latam region has been there for some time, and some of our companies have ventured into those regions. I know DomRep is something that and with Guyana, although it's Caribbean still. So you're right on that. But looking overseas though, certainly. Let's take a look at the U.S. market, the North American market, U.S., Canada. While we've been talking locally and we say, well, the market's been flat, the market's falling because interest rates been up. The scenario has not been different in terms of interest rates internationally. The U.S., U.K., Canada rates have been up. But what we've seen in that there are instances where one's value is identified, or the companies that can make money in that kind of scenario, the investors go in. And so both of those markets did very well last year and even the year before.
Yeah, and they're doing well now. I think the S&P is at an all-time high again.
High, yes.
The drivers of the economy in the U.S. are public, and for the most part, and consumers or investors are able to participate in them. So you look at like AI, for instance, which is the talk of the world. Many businesses that have some measure of an AI exposure of some sort, whether it's Microsoft with their investment in OpenAI, NVIDIA and AI, Adobe and AI, they have grown significantly over the last year. NVIDIA is at an all-time high. Microsoft is approaching or at an all-time high. And Adobe is at an all-time high. Well, is recovering to one, because they would have been at one before. I think we have not yet recovered because the businesses that have done Well, some, because some are still listed. The businesses that have done extraordinarily well are not public.
But there you have it, folks. We've been chatting with Mr. Ryan Strachan. He's Vice President at GK Capital. And of course, he's giving you insights on the capital markets locally and internationally. Pay keen attention. Of course, here on Let's Talk Stocks, as we tell you, we give you information to make better financial decisions. Come back with us tomorrow morning at 9. Another wonderful program lined up for you.